What's going on, everybody? Hope y'all having a great day. My name is Josh, for those of you who do not know me. And in this video, I'm going to be going over my exact strategies on how I became a successful scalper and even mid to long-term holds. I'll show you what I look for. I'll show you my indicators that I use. I use very little indicators. I don't use RSI or VWAP or none of that. So this video, I'm just going to break down what I do and how I do it, guys. So if you are new to the channel, please hit that like and subscribe button. It does help the algorithms, and I appreciate it very, very much, guys. Thank you for watching the video. And this is probably going to be a slightly long video, probably about 15 to 20 minutes. So I encourage you to watch the whole thing through so you get every little piece of information that I'm going to tell you guys. It's not difficult. I'm not the brightest person in the world, so if I can learn how to do this, you can learn how to do this too. Now, I do trade personal accounts, my own personal cash, as well as I trade take profit trader accounts, and I do trade Apex Trader Funding. Now, I am an affiliate with Apex, so if you want the best discount codes, man, I'm going to leave a link in the description, and my code, which you would enter into the coupon code to get the best percentages off, as Apex does. Sometimes right now there's a 70% off right now with Apex, and you pay $40 lifetime, but most of the time they do 80% or 90% off, guys. So if you're interested in Apex Trader Funding, please hit that link that's in the description and use coupon code JD87. I'm sorry, capital J, capital D, 87. All right, guys. So let's go ahead and get rid of my face so I can show you all the charts. Now, what I use is TradingView. Now, I don't make my trades off of TradingView. I make them on my TraderView account. Now, that's with personal account and prop firms. I strictly use TradingView. I don't do any other platform but TradingView, guys. So the first thing I have up here is my TradingView charts. The only two indicators that I use is a supply and demand, which are these red lines here are supplies, and if we could find one, these blue lines here are demand zones. So I use a supply and demand indicator, and I also use the session highs and session lows, and they outline and tell you exactly what session you're looking at while you're trading. Then the second thing that I do utilize is a 15-minute open and range breakout. So when the market opens at 5 p.m. Central, now that's going to be 6 p.m. Eastern, I let the 15-minute candle close, and then I draw this box here at the top of the candle to the lower portion of the wick. Now, if you have a high wick, you want to draw it from the top wick to the very bottom of the wick. Now, this is when the market opens at 5. I also do draw a New York session 15-minute orb as well, and I make this yellow. So this big red candle here is 8:30 Central, because I'm in Louisiana. So this candle closed. We have a low wick down here with very small wick. You don't have to be pinpoint accurate on where it's at, but you want to come kind of close to it. So, and I extend it all the way out further enough so I can get the full day, the full trading of it. So once the 15-minute candle closes, you mark it off. You could either do lines or do a box. What you do is, for the box, you go to drawing tools and you go to shapes and you could do rectangle, and you could color it however you want to color it, guys. So I do blue for the Asian session, and then I do yellow for the New York session. So once the 15-minute candle closes, it's best to jump down to either a 5 or a 1-minute candle. So if we jump down to a 5-minute candle, guys, all I'm looking for in order to make a trade is a break either above orb or break below orb. So in this instant here, this was Friday. Well, right here was Thursday, because this was the 6th. So 5 p.m. Central on the 6th, which would be Thursday going into Friday's trading. So anywhere within orb, I do not place any trades. So what I would have done personally when I'm looking for a scalp off of orb, I wait for the break. Now I would have entered probably right here at the price of maybe 25,315 and rode it up to about 25,326. Now that is a 10 nope 20 point scalp. So 315 up here and then here. So this would have been a perfect scalp. Now I probably would have exited there. I would have made my $1,000 because I do like to go heavy on these scalps. I would have waited for a retest. Now you can see this big candle here did break into orb, but came back up and closed above orb. So the candle opened here, came all the way down, came back up and closed here at 25,324. I probably wouldn't have entered this just due to the fact that it did fall. I would have possibly waited for a break of the low, but it didn't. So once this candle closed above orb, I would have entered into a long position. Let's just say I entered here at the price of 25,323 and rode it up 10 points to right here to 333. That's a 10-point scalp. Now I could have rode it higher, but if I'm going heavy with 4 or 5 positions, all I need is 10 points. But if you would have rode it up to 25,343, that would have been a 20-point scalp right there. Now I probably would have took a little time off, waited for the markets to, see what happens. But then again, we had a candle open up. This green candle opened up down here, came above, closed above orb. I most probably would have entered into a long there. We did come down, retest the top of orb, but then went up. So let's just say if you got in at 25,321 and rode it to its high, that is almost 30 points from here to here. Now if you want to see it on a more of a closer scale, you want to go down to a 1 minute. Now the 1 minute you can see it a little bit better here. So market opens, this is the 15-minute orb start. We broke above it. You could have made a scalp there, 10 points easily. Came back down. I would not have touched it anywhere in here. Came back above, broke down, came back. I would have entered into a long position here. Entered into it maybe 10, 15 points. So right here is 10 points. Right here is 20 points. And you could have rode it to 30 points. So that's 30 points that you possibly could have took. Now you don't want to get greedy and stay in a position for a long time. Unless you plan on holding overnight, I would suggest a couple micros. I wouldn't hold a full-size NQ over the course of the night just because it's too risky, guys. You see how it comes back down. Now at this time, I probably wouldn't have been trading because I'm probably upstairs at that time. So look what it does. It comes back down, hits the bottom of orb, uses it as support, comes up, breaks it, tries to use it back as a support again, but guess what it couldn't do. So if you were here at the computer at this time, you would have entered probably somewhere around here at the price of 25,268. And if you would have wrote it all the way down, that's 30 points, that's 40 points, that's 50 points. From here to here is 50 points, guys. If that's not enough points for you to profit off of, I don't know what to tell you guys. Comes back up, retouches orb, retests the bottom of orb, and falls exactly back down to where it was previously. Another perfect 30, 40 point position move. Like I said, I love 20 points because I do high positions. So I wouldn't even wrote it all the way down here. I would have been out because when I use orb, I don't necessarily look for long-term holds. I'll show you what I do to look for long-term holds, but it's not the orb. What we do, we come back up, retest the bottom of the orb, and we fall, we come back up. Now, if you do want to hold, that's up to you. Just make your risk management plausible, right? You don't want to risk too much. But luckily, if you were in it, you would have caught this better of a fall, right? And another thing that I do is I mark off the previous day's highs and lows. So you see this blue line here? This is the previous day low. And if we scroll out, let's scroll out. This is the previous day high. So previous day low, previous day high. I marked that out before the market even opens at 5. So what do? We use it as support, right? If you look at it here like, oh, it's not support. Well, guess what? Go to a 5-minute candle. On a 5-minute candle, yes, sir, it is support because we didn't really have a candle 100% close below the previous day's low. See this candle, even though it's below it, the wick is still touching it, so it's still part of a support. So what would you do here? You would use this as a support, so you would take a long position. You go up, it tries to retrace and hit the lower portion of orb again, bounces down, comes up, breaks into orb. This is where I do not trade. And then you could have made a few scalps here and there. We fall back into orb, hit the bottom of it as a support, resistance, resistance, fall, fell back into a support to a resistance, and then boom, hit the previous day's low again as a support, bounce up and break through it astronomically. Guys, so there's plenty of opportunities to make scalps off of just the 15-minute open and range breakout, as well as previous day's lows. And if we were trading higher, we would use this as a resistance, the previous day high. That would be a resistance, guys. Now let's go to the New York session open. This is 8:30 my time, Central, so that would be 9:30 Eastern. So this is a 15-minute orb. Once again, it's yellow because it's the New York Open, and that's what I designate New York Opens. So we come down, hit it right here, breaks through. I would automatically enter into a short because we already broke it, and this is the second break, so I would have definitely entered into a short. Let's just say I caught it late and caught it down here at 876. All the way down here, man. That is well over 100 points, even almost 200 points, guys. So if you can't make money trading orb, then you can't make money because it's so easy to trade, and you just can't go wrong with orb. Look, it comes back up, resistance, breaks resistance, breaks it, and it's a support level, guys. So I trade break belows and break highs, but I do not touch it anywhere within orb. Now sometimes you'll have an Asian session or New York session where it just stays within orb. Guess what? I don't make any trades. Now I may make a small couple micro plays, but I'm not putting on full size positions if it isn't above or below the open and range breakout. Now for my long-term holds, I use my supply and demand indicators, guys. So I like to go on a higher time frame. Let's just use a 2-hour time frame. Now, you look at the supplies, and then you look at your previous demand zones. All right. We got up here. We printed a few supply zones. So I'm gonna right off the top think about going in short. Now, when you're going in short, wait for these big moves. You don't need to be heavy because you're going to mess up your drawdown. So I would advise just using maybe 6 micros or maybe possibly 1.5 micros, which will equal 1.5 full-size positions. This right here, this is a new week opening gap from 2 weeks ago. So once we broke that and refilled it back up, we touched back into the supply zone. So right there, when it resisted and it fell, I would have entered into a short because these bigger time frames, these 2-hour time frames, give you great runs on shorts or longs. Now, I predicted this fall the prior day, just due to the fact of these supply zones printed on the 2-hour. And I knew it was coming down here somewhere because what does the market want to do? It wants to go where the liquidity is. And where the liquidity is at your demands and your supplies. So the market fell. Boom, where did it fall to? Basically almost touched this demand zone here. Used it as a support level. Came back. And now when the market reopens on Sunday, which is tomorrow, I'm expecting it to pull up a little more and then go back and retest this demand zone. Now we can go back in the past and show you this example again. So we get demand zones print here. So off the top, being a bigger time frame, I know we're going up. So boom, we do go up, and that's what, 500, 600 points, guys. So we got supply, 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 supply. Guess what? I'm going to short. And where does it go? Right back to these demand zone areas here, guys. I don't want to tell you it's 100% accurate, but I will say it's 92% accurate. Guys, it's got to be in the 90s, high 90s. So we get here, fill this demand, we fill this liquidity. Now what we have to do next, we go back up to refill this supply area, guys. We filled this liquidity, we came back down, back into these demand zones where there's liquidity. We come up, boom, we have a demand print. So guess what I'm going to do? I'm taking a long position. We break in to these supplies, print more demands, and guess what? It just keeps going up, guys. It's as easy as that. Look at all these demand zones. Boom, boom, fell back into demand. Boom, fell right back into demand, and then boom, we just skyrocketed up, guys. That's how great these tools are. And look at this fall. If you would have hopped in on these supplies on a personal account where you could hold over the weekend and hold pretty much infinity, look at that fall. We fell here inside this demand. We went right back up into the supply, and then boom, we crashed. It's as easy as that, guys. So on a higher time frame, these supply zones and these demand zones are awesome if you're looking to hold a few days, even a week or two. They're great to hold long term. We can even go to 180 minute, which is a 3 hour, and you can get the same outcome. We have a demand print here. Boom, we come back up and we push higher. Look at these supply zones. This is at the price of 26,265, all the way down to 24,700. That's 2,000 points, guys. That is an astronomical hold if you are allowed to hold over the weekend with a personal account or even like a Diamonds Hands account on Elite Trader Funding they offer. You can hold over the weekends and stuff. So, yeah, that's about it, guys. And as well as I'll show you on a 5-minute candle, I'll use the highs and lows of previous sessions as supports or resistances, guys. They're great for using that as well as this true day open indicator. True day open indicator prints when the Asian session closes. So once the Asian closes, this line, this dotted line right here, gets printed, and it's the true day open. You can use that as basically a magnet. It'll always, most of the time, not always, most of the time, will gravitate back to the true day open. See a print here? What did London do? Took it right back down and used it as a support, and then broke it, and then used it as a resistance, and then fell. So you can use that indicator as well. We're going back up to it probably Sunday when the market opens, and then I believe it's going to fall because we do have that supply zone on the 2-hour candle, which is basically right here where the true day open is at, guys. And that's it. It's a pretty easy strategy, especially using the orb. It's pretty easy and it's pretty accurate. Like I said, it's 90-something% accurate, guys. Well, that's about it for the video, man. If you were here to the end of this video, I appreciate everything. Thanks for watching. Thanks for the support. Hit that like and subscribe button. It helps the algorithms, and I appreciate it very, very, very much, guys. And don't forget to hit that link in the description of the video for your Apex Trader Funding accounts, guys. But anyway, y'all have a great day, and y'all come see me on my live streams. I live stream during the Asian session, Sunday through Friday. And that's it, guys. Y'all have a great day, and thanks for watching. Peace.